Hey, good morning, everybody. Let's have a wonderful week this week. Okay, so a lot to talk about this week. A quick lesson to start off, but first, key information this week and when it's coming out. CPI information on Wednesday, followed by PPI information on Thursday, jobless claims on Thursday, consumer sentiment Friday, and four Fed speakers this week. So we'll definitely have a lot of volatility in the market. Now, first, a lesson. I mentioned money management, and I mentioned money management a lot. And I'll tell you a quick story about playing poker or being a trader. Money management is if, let's say I have $1,000. I can't play too high of stakes game because if I get beat, even if I'm a 90% favorite, I will have no backup to re-enter the game. The same is true with trading. Would you rather be an awesome trader that has terrible timing and terrible money management? Me, I've got great strategy. However, I paper hand a lot of trades. I don't mind sharing this with you because I don't want you to feel alone. I know a lot of you get into trade. You're like, oh, shit, I should have played the other side. Then you sell and then you re-enter another trade. We all go through these learning curves when it comes to trading. So I'm just suggesting that on trades, you make them all reasonably the same size. If you have $1,000, and I used to be guilty of this, I would take a trading account of $2,500. I would go on quite a run, 2,500 to 27,000. Then a trading account would get hit from 27,000 back to 2,000. I'm saying, how do I do this? Because I over levered myself. When I was at 27,000, guess how much worth of options I had? $27,000 worth of options. Guess what happened? I ran out of time. I was correct about the position. It just happened a week later. So I would lose 26,000. By the time I sold, I was down 90%. And then I would work it up from 2,000 all the way again. Terrible way to trade. Money management is key. If you're an average trader, but you've got great money management skills, well, then you're taking a bunch of losses. Yes, but your losses are minimal. Whereas when I take a loss on a trade, it's like a maximum loss. It makes me feel terrible. I've got amazing trades to follow it up with, but those always hurt. So please, money management for everybody. Now, next, I mentioned this over the weekend. The S&P 500 is made up of a number of different stocks, right? You've got Apple and Microsoft now represent a combined 14%. So someone will say, well, what does that matter? How does that affect the market? Well, if you look at the market, pre-market this morning, you'll see that S&P or that the SPY is actually probably up, right? It's up 0.2%. However, the Qs, right, technology, are down 0.06%. Shopify is down 0.52%. Google's down 0.48%. Microsoft's down 0.33%. But the SPY is up 0.2% and looks extremely strong pre-market. How is that possible? Well, I just explained the makeup of the S&P 500. You got 7% of Apple, 7% of Microsoft. Understand that banks make up a good percentage of as well. So why does that matter? Well, we heard over this weekend, Janet Yellen suggested that short selling banks shouldn't be allowed in this turmoil and that they're going to provide legislation so that you can't short banks. Well, what does that mean? What does that mean, Matt? Well, let me tell you what it means. It means this morning you've got banks like PacWest up 33%. So yeah, very smart people at 4 a.m. reading that over the weekend probably bought PacWest shares at what, $6.38, up probably, a good 20-25%. What would I do? I would sell them. Why? Because it's just news. It's rumors. It didn't happen. Congress didn't pass anything. However, it's going to be extremely hard to short and push these banking stocks down, even though they can go under. Well, what do you mean they can go under? Well, in February, the SEC did a study of smaller banks, and they determined there are over 700 banks, 722 to be exact. And again, this came out about 2 months ago, that could technically go under. All right, well, we've seen 3 banks go under. There are going to be more. However, we're probably not going to be allowed to short sell them. Same with Western Alliance. I mean, it's back up at $30 where Jim Cramer liked it. It went back down to $12.16. It's back up at $30. I'm staying away. I just had to share this information because financials play an important role in our markets. So as financials fail, the market will go down. If you can't short sell banks, well, they're likely to just meander right in a range or get popped up on a squeeze. And you're seeing that on PACW this morning. Now, again, I wouldn't get involved with that. Next, all right, we'll go back to a couple more images here to talk about, okay, California. California defaults on $20 billion in federal COVID loans. However, California had a ruling, I think it was late last week, maybe discussed over the weekend, that every African American that's a resident of California will receive $1.2 million. Part of like I forgot the term that they used. Okay, so what's my watch list this week? I've got this. Microsoft. Okay, I mentioned the push on Microsoft. I mentioned Microsoft leads the S&P with a 7% holding. Same with Apple, comprised the S&P is 7%. Even bigger when it comes to the NASDAQ 100. With that said, Microsoft calls above 312. You see Microsoft holding that 312 level, it's going higher. Now you see Microsoft break 310, but specifically I would look for maybe 309.40, 309.50 to the downside. I think it's okay to get into puts. And again, Microsoft and Apple will lead the market higher or lower. So understand the makeup, okay? California's reparations task force has voted to approve recommendations on how the state may compensate for reparations to Black residents, with estimating projections that it could owe $800 billion or more than 2.5 times its annual budget. Now, California just defaulted on loans to the federal government, but they're planning on giving out $800 billion, which is great. It should have been done a long time ago. I mentioned key information this week. CPI Wednesday. What could turn the market? Well, if CPI comes in hot Wednesday, PPI on Thursday, jobs on Thursday, okay, if either of those first two come in hot, it means the Fed has to do more, okay? When the Fed has to do more, they have to continue to raise rates. Right now, the market thinks no more rate hikes throughout the end of the year, and we will have 3 rate cuts by the end of the year. But you guys say to me, I listened to the Fed. They didn't say anything about rate cuts. In fact, they said there were not going to be any rate cuts. Well, the market has it factored in that there are 3 rate cuts and a 86 basis points. How do I know that? Because the Fed's funds rate projection for the end of the year is around 5.18, okay? The market's projection for the Fed's funds rate at the end of the year is 4.30. So there's a discrepancy. 5.18 to 4.30. It's off by 86 basis points. So the market is assuming that the Fed's going to cut 86 basis points on average. That's what the Fed funds rate and the future Fed's funds rate is telling you. How do you find that information? Google that shit. I don't make this stuff up. It's so easy for everybody to figure this out. And what will that tell you? As the estimated Fed's funds rate goes up, say it's like now 4.70, well, now we're seeing less rate cuts. Less rate cuts, more stress on the market. All right, anyway, so I mentioned Microsoft and Apple. Here's interesting. Charlie Biello, here's one of his postings. Hopefully you guys can see this. Great guy to follow on Twitter. Price to earnings ratios. What do you see at the top? Amazon, 252, meaning you take their earnings over the price of the stock over earnings, and the ratio is 252. The S&P 500 on average has an average of a PE of 24. Understand, that's still pretty high. Historically, average of the S&P PEs for S&P companies has been between like 17, 17 and a half, 18, something like that. So the market still is frothy. But when you get someone like Amazon, 252, NVIDIA, 165, Tesla, 50, Netflix, 35, Microsoft, 34, Apple, 29, everything is higher than the historic numbers. How is that possible? Earnings are crushing. That's why the market's higher. But earnings have been reduced. Let me just see if I think about earnings. Okay, here we go. S&P companies year-over-year revenue grew by 3.9% in the first quarter, which is the lowest growth rate since Q4 of 2020. So the economy is strong. The economy is growing. Bullshit. It's growing at the slowest rate. What does that mean? It means probably a recession. Here's another one for you. S&P 500 companies reporting year-over-year decline of 2.2% for quarter 1, 2023, which is the second quarter that the index is reporting a year-over-year decrease in earnings. So earnings are going down, but they're beating because analysts lowered the bar. That's exactly what's going on. What am I expecting in the market? I'm expecting the market to pull back. I mean, I mentioned I was a bear. So I was a bear last week. Monday, Tuesday, Wednesday, Thursday, market went down. Friday, the market popped. I have a small account that I'm trading. Here's another lesson. And I shared with everybody, oh my God, my small account, which was $100 when I started, went up to $500. I said I was holding, went up to $600. I was wrong. One of the days last week, the market went up before crashing or going down. So my account was down to $300, went back to $950 the day of my deposition. I couldn't trade that morning. So I'm watching the account go from $6 to $950. Couldn't sell. End of day on Thursday, back to $828. What did I do? I unloaded a shitload of positions. Why? Because my account was down to $300 earlier in the day, or $400 or whatever it was. I was down 40%. I went from down 40% to being up 30%. When you're up 30%, that is when you sell. You sell high, you buy low. If you buy high and sell low, you're in a world of hurt. Okay, this is interesting as well. Money managers dumped their net bullish oil holdings by 19% this week. It doesn't mean they dumped altogether their oil positions. They lightened up on oil. All right. This is the breaking information I spoke about. 722 banks reported unrealized losses exceeding 50% of their capital. I'll explain it in lamest terms. You're a bank. You have $1,000. Yeah, you're a pretty damn small bank. You're losing $500 of unrealized earnings, meaning you're in some type of derivatives trades. And if it was to be redeemed right now, you would be down $500 of your 1,000 holding. All right. It makes you very illiquid. A lot of our banks are illiquid. Illiquid banks and a run on bankers or customer deposits makes the bank even more illiquid. It's like trying to squeeze water out of a rock. You can't do it. All right. Anyway, what else did I want to talk about? Rule number 1, money management. JP Morgan. Here's another article right here. JP Morgan holds a massive gold derivative short position that could be larger than the bank's total assets. I just spoke about banks becoming too risky. So JP Morgan is betting that gold is going to come down. What did we see over the weekend? China bought a shit ton of more gold. Who would win that battle? People buying gold or JP Morgan? Well, JP Morgan, they're a massive bank. They can influence the market however they want. Earnings this week, ton of earnings this week. All right, so what else do I want to share with you? What do I like to do? I showed you last week. I like to draw it out. So what do we see a bounce off of? Well, 404. How do I know that? Because I drew it out. I pay specific attention to the numbers. What did I do? I made a new chart for this week. I took last week or the last 2 weeks. I still got that 404 number. It helps me see resistance. We're still around the top line. I hear people talking about 420, 420, 418, 418. Then there's this dude who's a tool, and I got a tool on somebody today. So I'm going to keep tooling on this dude who I actually interviewed, the trading champ on Twitter. The dude claims that Apple had a breakout, which it does according to the chart. NVIDIA has a clear breakout. So he's saying how bullish he is there. Then he's saying, but I told everybody the market's going to go down. Well, here's the catch, buddy. Apple and NVIDIA aren't going to go up if the market is going down. First of all, Apple will control the market. I happen to think he's right. The market could go down, but I would not be playing NVIDIA. NVIDIA is so heavily shorted. So just freaking tools like this piss me off. He's like, DM me. I've got open spots in my Discord. Yeah, we've got a Discord too. I'm going to show you how I use my Discord so you don't have to listen to a tool like that. All right. So our Discord, it is set up for everybody to use. What the hell does that mean? It means you go to the Flow and Algos room. You use if you don't know how to, it tells you right here. What can you do? Well, here are just some of the things. You can look at the biggest flows of the top 10 largest option flow orders for the day. You can see the summary statistics for option flows for any given ticker. You can list the top 10 orders where volume is unusually higher. Unusual flow. Well, isn't that what Unusual Whales does? Yes, we have the same shit. So what else do I like to do? I like to look at dark pool levels. I like to look at the top flow. So let's look at the top flow. Let's see, TR. This is how I'll start each week. And in addition to starting each week, I like to go back and see what other members are looking at over the weekend. So I'll look at the top flow. Somebody else looked at that over the weekend. That's great. I'll scroll down. I'm looking at the dark pool levels of the SPY. Holy shit. What are you guys noticing? Even if you're the lamest of investor, meaning the most basic or beginner of investor, you type in a search like this. What are you seeing? You're seeing price fills at the bid, okay? The number of shares, 1 million. Well, that's a huge, substantial portion. What are you seeing? All at the bid, right? Where do we go from here? Higher. So they're selling, all right, at the bid. They're unloading the SPY. Someone might look at this and say it's bearish. This was bullish on Friday. You could see all of these trades happened at 4:05. I mean, they're all probably from the same institution right here. So this is a little thrown off, and it was probably done early in the morning. Net flow of the market. Now, what does this tell you? Well, anything, these are your net premiums. So you can see the price. The price is in white. The call flows would be in green. So they were still buying calls into the day. They were loading up on puts towards the end of the day as well. So how would you use it going into today? You wouldn't. You would look at the market net flow around 10:30 a.m. What could you see? If you see at any point a spike in puts, it's going to tell you the market's going to drop. Yeah, the spike happens first. You actually get tipped off first that the market's going to drop. Then we'll look at the net flow for the SPY. What are you seeing here? Okay, well, heavy increase in net premiums for puts. So as the market went here and it was coming down and consolidating a little, people said, holy shit, it's consolidating. It spiked a little too hard. The cost for puts went up. Now, the cost for calls went up as well. I mentioned they were buying calls to the end of the day as well. So short term, I looked at the call put ratios this morning. Short term, I will tell you, they are more heavily weighted to calls. All right. Longer term, 1 week to 1 month, they are a little weighted to puts. They're more balanced. So there's a lot of indecisiveness in the market. So when we talk about the SPY going up to 420, but I still think we're going to see 400 on the SPY. I'm still a bear. I still think 400 is coming. So if we go to 420 first or 422, which is like the first GEX number, that's the highest GEX number. The bottom GEX number right now is 385 on the bottom side. So people are anticipating a big market dump. I don't think it's going to 385, but I can see 400. All right, next. There are a ton of earnings this week. Okay, so I'm just bringing up the question. Somebody mentioned Upstart, and Upstart and Affirm have earnings tomorrow. So let's talk about both stocks and potential trades for that. It's up to you if you're bullish or bearish. I'm going to give you the two scenarios that I see playing out for both Upstart and Affirm, and I'll tell you why. And then you can say to yourself, well, I'm bearish because these companies don't make any money. Or you could say, I'm bullish because these companies are so beat up that it would be hard to miss as substantially as they have in the past. All right, so Upstart, here we go, $13 right now. Understanding they have been purchasing the last 3 days after a 3-day sell-off. So we're still a little under that $15 mark that we're at. Now understand, Upstart was peaking around $21.50. Let's remember my puts that I took at $21.50 or even $22, went down to 17, secured money in those. But Upstart, okay, if it's green, if they beat earnings, or shall I say they don't have to beat earnings, but the market likes their quarterly report and they get bought up, you could see a 30% move in this stock. 30%. You could see a 4-point move. Let's just say we close right where we are now, 13. I could see $17.50. Okay. On the counter side, Upstart comes out. Remember, they were a $300 stock. They are a $13 stock now. They have a market cap of $1.1 billion. Okay. Who's to say they're not really worth what? $700 million. Okay. Let's run with that $700 million. Let's say they drop 30% on earnings, because yes, I think you could see a 30% upside or downside. They dropped 30% earnings. We close right here at 13.24. Let's say 30% to the downside. You're going to be right around $10. So what does that mean? How would I play that? Well, if I was going to play calls and Upstart going to earnings, I would probably look at the $15 calls that expire this week, and I'll just check out and see how much they are. Again, you want to know how much IV you're paying? $15, you're paying 76 cents. So if we get a pop to $17.50, they'd be worth $250 each. You're paying, let's say, $75 each. Okay, going to $250. That's what? That's a 240% return. Okay, so there is your bull case scenario on Upstart, 240% return. Let's give you your bear case scenario. Your bear case scenario is it's going to drop right to $10. Okay, what would I do? I might get in like the $12 puts. I was originally thinking the $10 puts, but the 33 cents, if it drops to $10, even if you have time, it would probably just hover. You wouldn't really make any money. So I'd probably look at a higher strike, like the $12 level, where we're still over $1, over 10% away from it. You're looking to pay $91. Of course, nibble on the way in. So maybe you get it for 86. If you get it for 86 and this thing goes down to $10 or even $9.80, let's just say, you're looking at $2.20. $220 a contract. You're buying the $12. You're paying 86 cents. 220, you're looking at a return of 186%. So that's what I would say. Now, a firm is similar. Now, a firm could be in more trouble. A firm is a buy now, pay later, AFRM. Now, this one is more volatile than me, and this is probably the one I would be playing. Again, we're at $10.71. I guess it went up $1.58, so it was as low as $9.28 on Friday before the spike. So we know 928 is a good number, and we say to ourselves, well, it could lose 20% off that. That's about $1.80, 928, $1.80. You're talking about like $7.40. All right, on the downside, if they miss on earnings or the market doesn't like it. Now, if they beat and the market likes it, I can definitely see this stock back at the $14 level. In fact, when it was $14.10, I made numerous postings on Webull that it was a piece of shot, buy now, pay later. 47% of people paying are paying late, if paying at all. So again, downside, $7.80. Upside, that $14.20 mark. That's what I'd be looking at. Next, I wanted to discuss to everybody. Oh, we were still looking at Discord, right? So let's get back to Discord. Sorry about that. I get sidetracked. But I was going to talk about your watch list. All right. So please don't let me forget that. Someone's checking out Etsy. What can you see on Etsy? Well, I'd be bearish on this. Cost for calls is coming up towards that 0 number. But again, you're looking at the volume, pretty substantial. Costs for puts, pretty substantially higher. So again, if I was going to get Etsy, I don't get in right away. I look for it, and then I look for best entry. Interface energy. Again, what can you see? The put level is still pretty high. Calls did spike. People were expecting a rebound, and now the cost for calls are under. The price of the stock is up here. It looks like it should be coming down. So again, I would be bearish. Interface. You could do this for any of your stocks. You can look at dark pool levels of SPY. The reason I didn't want to talk about dark pool levels so much of the SPY today is because when we saw what happened on Thursday, in the market, I spoke about dark pool levels. I was short the market. I was in a number of puts on Thursday. As it went down from whatever, I thought we were going to bounce off 412.78. We didn't. Dropped right past it. 410. Thought we were going to bounce. We didn't. Dropped right past it. So I left a hell of a lot of money on the table on Thursday because of those damn dark pool levels. But whatever. That's what I like to follow. Dark pool levels. Just looking at some stuff pre-market. Qs are dropping more, down 0.18%. Again, I know Microsoft is the leader. I still am looking for Microsoft to pull back under 300. We're at 310 now. That's over 3%. If Microsoft pulls back 3%, then Apple's going to pull back 3%. So I'm still a bear in this market. But if I'm going to day trade today, which I am, of course, I'm going to look at the dark pool levels of the SPY. So at least I know what I'm looking for. So we're sitting at $413.11 pre-market. So I make a mental note of that, and then I go to Discord. I'll go to Discord, I'll open up level. I'll say 413. So we're trading in between this level. What could that mean? Well, the same thing I mentioned when I was trading on Thursday, 412.76. It was 412.78 on Thursday, is the largest dark pool level. So if the market happens to drop, I'm going to look and see, and we close right at that level, 412.63 on Friday. So I'm going to say, hey, are we going to bounce off Friday's close? If we bounce off Friday's close higher, it's obviously bullish for the market. Then I say 414, 14, 415, 52, smaller dark pool levels, ghost level here at 416. Yes, on a bullish day today, we'll bounce off 412, go higher, and crack 417. So there's your bull case scenario. I use the dark pool levels. I say, okay, we're at 413.11 pre-market. We come down, we bounce off Friday's close, 412.63. We head up most of the day like we saw on Friday, strong buying. That's your bull case scenario. I'm not a bull today. I'm sitting on the sidelines, but I know to myself, if the market is bull today, that's what I'm looking for. Whereas Friday, I was looking for it to reject at certain levels. If I see something similar, a dip and then a rip higher and steps higher, at 1 p.m., I won't get into puts because I'll say it's going up to 417. Now, counter to that, I would say, okay, we broke through dark pool levels on Thursday. Volume was good on Thursday. Friday was a dead cat bounce. So now I'm being a bear, okay? I want to give you your bear case scenario. Friday was a dark pool bounce a dead cat bounce in the SPY. So what did we see happen on Thursday? Well, in order to understand what happened on Thursday, what would I do? I'd go back to my chart or the actual chart from Thursday, and I would say, okay, before we bounce, what do we see? We saw something like, 407 to 404 the day before on Wednesday, 414 to 408 the day on Tuesday, 414.82 to 407.82. So understand, Tuesday and Wednesday of last week, 414.82, 414.86 were all the highs. So let's just say 415. The lows both days, 407.82 and 407, like, I don't know, 20. So let's just say 407, let's say 408. So 415, 408, we're still trading that narrow range. So again, if we get up to that 414, whatever level, I'm expecting rejection. I'm going to be a bear. If we see the market reject, and I'm using something like dark pool levels, but specifically I'm going to use, and anybody can use this. I like to use as my indicator trading view. Why? Because I have my 1 minute chart. Let me show you guys first. I know I'm talking about it. I don't even have it up. All right. So I like to use trading view. It's free. Anybody can get it on the internet. You just log in, whatever. I'm looking at the 1 minute chart. Okay. The 3 minute chart, the 5 minute chart. Now the 1 minute chart helps me become a sniper. So let's just say we're looking at the 1 minute chart right here. When we peaked out on Friday, you can see some selling volume right here. And this candle ends, you know it's going down. So if I'm using the 1 minute chart and the 1 minute chart and confirming here, and I say, oh shit, okay, I think the market's going to drop. Do I buy puts right at this level on Friday? No. I just saw the drop. That's the 1 minute. Then I'll use the 3 minute chart to confirm, okay, which is right in here. Then it goes back up, and we'll break it down to the 1 minute so you can see it go back up. So after we drop, it goes back up right here, right here, right here. After this one candle, now that I have confirmation, I can get into puts. So if I'm getting into puts, and let's say they don't expire on Friday because I don't want to be risky. They expire Monday or even Tuesday or Wednesday. They expire every day this week. It doesn't really matter. What would I do? I'd be in at 413.38. So even that we're bouncing up this morning because I held overnight, hypothetically, 413.16, I'm still profitable because I waited for the 1 minute and I didn't buy right here, or else when the market opens this morning, I'd probably be red. I would wait for it to go back up and give me the counter position. Now, the same thing, if you're in here and you wanted to get in right here and you're following the trend down and you see it bounce back up, you can get right back in here. 413.34, you're still lower this morning. Now, if you follow the market down here and you bought it under 413, then you're going to be in trouble. Yes, you ended the day green. There was some heavy selling end of day. We saw a little bounce end of day. No surprise, we're up here. But the point is, you don't want to start red. You'd like to start green. So that's just, again, how I trade. You're looking for the 1 minute chart, okay? If you're me, you're looking at the 1 minute chart, and you could do this for anything. But if you're using it for an individual stock, Google, Apple, Microsoft, Tesla, NVIDIA, AMD, and I see some 80 AMD questions there. If you're using it, you also want to have the market on the other side, because if the market's ripping higher, even if Disney looks like it's going to go down on the 1 minute chart or Netflix or whatever you're looking at, if the market isn't going to reject, then Disney will pull out of it and go up, whatever stock, Netflix. So again, 1 minute, 3 minute, 5 minute, easy. 1 minute, sniper. 3 minute, confirmation. 5 minute gives you the patience to wait for it to spike and get into your puts, or wait for it to dip and get into calls. All right. So hopefully that will help everybody. Please hit the like. Understand, I'm here every morning. I see some other questions about stocks. I will answer them. All right. We're not going anywhere. But please hit the like button. If you like me, share the video. Say, hey, this dude had good pre-market analysis. He gave the bull case scenario, dip, and then rip higher to 417. He gave you the bear case scenario. The bear case scenarios will break that 412.76 level, dark pool level, and we're going down again. I would look for the market to test 410. So the first thing I'm looking for is if it rejects 410, this is your bear case scenario, rejects 410, next level down is 408. Okay? So it goes basically every 2 points. 406, remember 404 was the baseline. We bounced off that twice last week. How do I know? I've got it right here. 2 bounces, all 404. So if I was in puts when we came up to the second bounce, rather than thinking we were going to drop under the second bounce, I would say no. 404 is probably going to be support. All right. So I don't know anything about HDK. That's that really stock in Hong Kong that they're playing with that would go like from 0 to 1,000 back to 0. All right. AMD is still strong. I would be extra cautious on AMD. These stocks are ripping. AMD mentioned last week Microsoft was going to be supporting their latest chip. And what happened? Crazy bounce. But we're right at that earnings level. Now, let's remember how bad AMD's earnings were. I would be cautious because your upside potential on AMD, and I'd have to go back to the 3 month, your upside potential is 100, I guess. but 100 rejected a number of times. So if I look on a more micro scale, I'm saying your upside might be 95. So that's a 5.5% upside move potential if the market is strong and if the chip sector is strong. Now, however, I'm looking at this bounce. Now, let's say the market struggles. Let's say we have PPI, CPI, jobs data is strong, and we go and revisit right where AMD was. Well, you're talking about $80 a share. And I happen to think AMD could bounce or drop as low as $78 a share. That's me. That's my charting. It was actually 77, like 90 something. So I rounded up to $78. So I say to myself, AMD potential upside, yes, 100, but I don't think so. If it's really a decent week, 95. All right, that's like 5-6%. AMD downside, I could see it drop 12 points from where we are, 11 points from where we are. That would be over what? 10, 13, 14%. So yeah, but other stocks you want to look at. Again, Roblox has earnings this week. Now here's the conundrum I have with Roblox, and here's the honest truth. Okay, my girls are on their iPads so much. My ex-wife now gives them money to buy Roblox. What do they do with it? They skip levels. They buy eggs that hatch. They're these pets that follow them around. Nothing too complex, but they love the freaking game, and now they're spending money. Other kids are spending money. This is what they do after school. They get on with their friends in the Zoom call. One of their friends or three of their friends are on the call, and they're all in the same freaking game. And they're all spending money. Hey, let's skip this level. Blah, 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 blah. It's $1. It adds up. So I don't know. Time on Roblox in the U.S. got to be going up. A time on Roblox in China, I know they limited it to 1 hour a day for kids. Not Roblox, but to be on the internet playing some type of game. All right, so you have limitations there. So yeah, Roblox would be another one. We've seen what Roblox does after earnings. Again, it looks like it's kind of beat up. We are at a support level. I'm going back to 3-month level. You're talking about $33. Now, if I go back a year, then yes, Roblox, if they disappoint, will drop to $27. Okay, so again, two scenarios. Roblox disappoints on earnings. You're going to see an 8-point drop to $27. An 8-point drop is going to be somewhere in the range of 26%. Now, let's say Roblox surprises to the upside. Well, shit, it would not surprise me if it goes right back to $42, $43, maybe even $44. So you're talking about, let's just take my first number, 42, okay? You're talking about a 20% upside. 43 would be a 23% upside. 44, a 26% upside. So again, if you want to get more risky for your smaller accounts, it doesn't matter. What I would say is I would look at Affirm, I would look at Upstart, I would look at Roblox. Why? Because Apple, Google, all the big players, when they report earnings, yes, you're seeing a pop of 4%, 2%, 8%, 6%. However, these smaller players, Upstart, Affirm, Roblox, you'll see a pop or a drop on earnings of probably 20%, probably up to 30%. I mean, we saw what happened to Snap, Pinterest, things of that. Okay. Yeah, they buy plenty of clothes as well. Yeah, they buy clothes. I know one parent who gives their son Roblox money. He has a limo, a Lamborghini, a mansion, crazy kicks. So yeah. Here's what I was going to mention. Last lesson for today, and then I got to get over to Discord. Again, I'm watching the banks. I'm telling you, the Qs are dropping, but the SPY is still positive. We went over how that's possible. If you missed that, go back to the beginning. But here's my watch list. All the way you guys can see it, just scrolling through, right? Scrolling. What do you guys notice? Anybody? How many fucking stocks do I have on my watch list? I've got way too many. Have I ever traded PLL, the lithium company, Piedmont Lithium? No, but I know it runs with Tesla. So whereas Tesla's up 2.5%, it might be expensive. PLL is up 2.5% this morning. So there are certain stocks on there for reasons. But I've got Zim. Remember we used to play Zim, Z-I-M all the time? Guess what I'm going to do this morning? I'm going to get rid of Zim. I haven't traded Zim in so long. Delete. Moderna. Yeah, it was great around 200 to the 150 level. I don't see a massive movement coming. Delete. Salesforce. Crazy expensive. Institutionally invested. So even if the market goes down, sometimes Salesforce doesn't. Not for me. Delete. All right. So yeah, I mean, that's it. I'll delete a couple a day. That's the lesson. Please thumbs up if you like it and you're signed into YouTube, and join me tomorrow morning. Everybody else, please. Join me on Discord. But here's the thing. Romeo is finally live trading today at 10:15. How does Romeo live trade? He shows you the orbs. He shows you the candlesticks. He's very clear about his strike and expiration, and he loves to secure profit, and so do our traders. So please, Romeo will be live trading at 10:15. I'll do a short Discord. I'm going to mention 2 stocks that I'm looking at, and potentially my view on Upstart and Affirm, which I gave you either put calls scenario this morning, both bullish and bearish. So I am swayed one way. That's just me. And I'll see everybody tomorrow morning. Have a great morning. Be safe.